In this educational video from Forex Capital Trading, we'll be looking at trading strategy number 2, trends. Let's start off first by looking at what defines a trend. There's 2 types of trends, an uptrend with a succession of higher lows and higher highs, and a downtrend which is a succession of lower highs and lower lows. The theory behind trading a trend is very basic. If you identify an uptrend, you're looking for levels to buy, to go with the trend. If you identify a downtrend, you're looking for levels to sell. It's advisable to not go against the trend, because one very common comment in trading is the trend is your friend, and it will continue until it reverses. So don't try and pick the reversal point. When trading trends, use support and resistance for entry levels and also setting your stop loss and take profit. So let's have a look at an example of an uptrend. This is the euro over around about a week. As can be seen, the market is flowing with continued high lows and high highs, giving traders opportunities to buy on dips and look to take profit as the trend continues. In this example, you can see that we are approaching the upward trend line, and also we have past resistance creating support in that there was a major high around about the same level as the trend line support. So in theory, there should be good buying interest at this level. So as a trader, you can enter the market by buying around 143.90. Your stop loss will be below the trend line support and also below the previous high, which provides extra support should the trend line break just briefly. Your take profit target should be near the previous resistance point, which is up towards this major high. So we've worked out our trading strategy. We want to be a buyer of euro at 143.90 with a stop loss if the trend breaks at 143.40 and a take profit if the trend continues at 144.75. In this case, we're risking 50 points to make 85 points. So the risk reward is very, very good. So let's see what happened. We bought euro on the dip at 143.90. The trend line support held and the market rallied up to our take profit level, where we closed at 144.75, creating a profit of $4,250. It needs to be noted that in this strategy, the maximum risk was our 50 points or $2,500. Now let's look at some further examples of trends. It can be seen here very clearly that the market is trending downwards, and this is a dollar-yen chart over a period of around about a month. In this example in the dollar Swiss, we can see that there was a very, very strong downtrend that actually reversed, and on the break there was a very strong move higher, with the market instantly turning into an uptrend, because markets generally do trend, so when one trend finishes, another one tends to start. The breaking of trends also provides a great opportunity for those wanting to trade the break, where you could have been a buyer on the break of the downtrend, looking for the new trend to take effect. So where to from here? What do we have to keep an eye out on when trading trends? Firstly, trust your support and resistance levels, because that's where the buyers or the sellers have been previously, and we need to make an assumption that they'll be there again. The use of previous highs and lows often create entry points, giving you a good indication of where you think the market will take off from now. Most traders draw parallel channel lines to help with the targeting of take profits, because if it's a longer term trend, it will quite often stick inside a trend channel while the trend is in existence. You can be active in moving your stop loss in a longer term trending market. So when the market breaks into a new high or low in the case of a downtrend, it could be the trigger to move your stop loss to a level where you're not risking so much and might even be actually making money if the market reverses. This is called a trailing stop and is very well used in markets that trend over long periods of time. Remember that the trend will continue until it breaks. As previously noted, the trend is your friend, so go with it until it reverses. As shown in the previous dollar Swiss example, trends breaking or ending provide fantastic break trading opportunities. So keep an eye out for when major trends break because they give you the opportunity to get in before the new trend starts and can provide very profitable trades.